The first step to improving your credit score is understanding where you currently stand. It's like trying to reach a destination without knowing your starting point. You're just driving around aimlessly. You need a clear picture of your credit history to identify areas for improvement. And that's where your credit report comes in. It's like a financial report card that details your borrowing and repayment history. It shows all your credit accounts, payment history, outstanding balances, and any negative marks, like late payments or collections. You can get a free copy of your credit report every year from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion. I'll put a link to annualcreditreport.com in the description below. Once you have your reports, review them carefully for any errors or inaccuracies. You'd be surprised how often mistakes happen, like incorrect personal information, accounts that don't belong to you, or inaccurate payment history. These errors can drag down your credit score, so it's crucial to get them fixed. Remember, knowledge is power, and understanding your credit report is the first step to taking control of your financial future. So, head over to annualcreditreport.com today, get your free reports, and let's move on to the next step in boosting your credit score. All right, so you got your credit reports, you've reviewed them carefully, and you found some errors. Now what? Don't worry, you're not alone. Mistakes on credit reports are more common than you think. The good news is that you have the right to dispute any inaccuracies and have them corrected. Disputing errors is crucial because they can significantly impact your credit score. Imagine having a late payment reported for a bill you paid on time, or seeing an account listed that you never even opened. These errors can create a misleading picture of your creditworthiness and make it harder to qualify for loans or credit cards with favorable terms. To dispute an error, you'll need to contact the credit bureau that's reporting the inaccurate information. Each bureau has a specific process for filing disputes, usually available on their website. You'll need to provide documentation to support your claim, such as payment confirmations or account statements. Don't let mistakes on your credit report hold you back from achieving your financial goals. Take the time to dispute any errors and ensure that your credit report accurately reflects your financial history. In the next chapter, we'll discuss another crucial factor that heavily influences your credit score: payment history. Paying your bills on time is crucial for a good credit score. Your payment history makes up 35% of your FICO score. That's more than a third of your score. Paying on time shows lenders you're responsible. Life happens, but even one late payment can stay on your report for 7 years. Set up automatic payments or use reminders to avoid this. Just make sure those bills are paid on time, every time. Okay, so you're paying all your bills on time, which is awesome. But there's another crucial factor that significantly impacts your credit score, your credit utilization ratio. This basically means how much of your available credit you're actually using. Think of it like this. Imagine you have a credit card with a $10,000 limit and you've racked up $8,000 in charges. That means your credit utilization is 80%, which is way too high in the eyes of lenders. It makes you look like you're relying heavily on credit and might be a risky borrower. Ideally, you want to keep your credit utilization below 30%. So, in this example, that would mean keeping your balance below $3,000. A lower credit utilization shows lenders that you're managing your credit responsibly and not maxing out your cards every month. Good news is that improving your credit utilization is one of the fastest ways to boost your credit score. You can start by paying down your balances as quickly as possible. Even small, consistent payments can make a big difference over time. Remember, just like with building wealth, consistency is key. Let's talk about a common mistake: only paying the minimum on credit cards. It's tempting to see that low minimum payment and think, that's all I can afford. But this is a trap. Credit card companies love it because it keeps you in debt longer. Pay more than the minimum whenever possible. Even an extra $20 or $50 helps. You'll pay less interest and get out of debt sooner. It's a win-win. All right, let's talk about new credit. Opening too many accounts in a short period can hurt your credit score. Each application triggers a hard inquiry, signaling to lenders you're looking to take on more debt. A few inquiries are fine, but too many can make you seem risky. Be strategic with new credit applications. Manage existing accounts responsibly first. Pay your bills on time, keep balances low, and add new credit strategically. Now let's talk about those old credit cards gathering dust in your wallet. You might be tempted to close them, especially if they have annual fees or you're trying to simplify your finances. But hold on, closing old accounts can actually hurt your credit score, especially if they're accounts you've managed responsibly for a long time. You see, one of the key factors in your credit score is the length of your credit history. The longer you've been managing credit responsibly, the better. Credit bureaus like to see a long and established track record. When you close an old account, it shortens your average credit history length, which can negatively impact your score. Think of it like this. Imagine you're a lender deciding whether to approve someone for a loan. Would you rather lend to someone with a 10-year history of responsible credit management or someone with only a 2-year history? The answer is pretty clear. A longer credit history demonstrates stability and responsibility. So even if you're not actively using an old credit card, consider keeping it open, especially if it has no annual fee. It'll help maintain a longer credit history, which is a positive signal to lenders and can contribute to a higher credit score over time. Let's talk about diversifying your credit mix. Now, I'm not talking about investing in a bunch of different cryptocurrencies here. When it comes to credit, diversification means having a variety of different types of credit accounts. Think of it like building a balanced investment portfolio. You wouldn't put all your eggs in one basket, right? The same principle applies to your credit mix. Having different types of credit, like credit cards, auto loans, or mortgages, shows lenders you can handle different types of debt responsibly. It demonstrates your ability to manage various payment schedules and loan terms. This can make you a more attractive borrower and potentially lead to better interest rates and loan offers in the future. Now, don't get me wrong. I'm not saying you should run out and take out a loan just to diversify your credit. Only take on debt if you absolutely need it and can comfortably afford the payments. But if you're thinking about financing a major purchase, like a car or a home in the future, having a diversified credit mix can work in your favor. It shows lenders you're a well-rounded borrower with experience managing different types of debt responsibly. I get it. You want to see results fast. We're all about efficiency here. But when it comes to building credit, patience is key. Think of it like growing a tree. You can't just plant a seed and expect a giant oak tree overnight. It takes time, consistent care, and the right conditions for that tree to flourish. Your credit score is the same way. You're not going to go from a 500 to an 800 overnight, no matter how many tips and tricks you try. But don't get discouraged. Every positive step you take, whether it's paying your bills on time, reducing your debt, or becoming an authorized user, it all adds up over time. So be patient, stay consistent with your financial habits, and trust the process. Remember, building good credit is a marathon, not a sprint, and the rewards of a strong credit score, like lower interest rates, better loan terms, and even increased chances of getting approved for apartments, are definitely worth the wait. There you have it, 10 easy ways to boost your credit score. Follow these tips and you'll be well on your way to a stronger credit score. Remember, small changes today can lead to big financial wins tomorrow. Like this video and subscribe to the channel for more tips on managing your money and crushing your financial goals. Hit that notification bell so you don't miss out on future videos. And hey, if you found this video helpful, share it with a friend who might benefit from these tips. Let's all level up our credit scores together. Don't forget to check out the description box below for some helpful resources and links, including a free credit score tracker that I personally use and recommend.